Hey folks, RB here. So quite a move today after the CPI came in as expected. I shared this path yesterday as one of the bullish path that if CPI comes in as expected or cool, there is a good chance that we will break out. We'll break out from the previous level of 5265 on SPX or 5280 on US 500, and go towards 5300, right? And I did speak about these two levels becoming a support through the day, that if there is a dip on 5260 5265, that should be bought, and that's what happened in the morning, that the first dip came towards 5263. That was the open. The gap remained pretty much open and rallied throughout the day. So I hope some of you guys were able to capture that move. I was mostly trading myself in the crypto space, so I did not trade much of the longs. I had no interest to chase the gap up of 0.5%, and that too above the previous highs, right? As a rug pull is always a chance, but if you did, you took the risk, it paid out good enough, right? So I'm here today to talk about what does it mean now, right? We spoke about the different counts and everything, and they pretty much you know the bullish count is in a play, and the bearish path that we were looking at yesterday. So let's just omit what is not a case right now, or what is not happening right now, right? And then we'll get so what should we expect in the next few days, right? So one of the bearish paths that we were discussing yesterday was that, okay, if this halts here at B, where it was yesterday, and we get a sell, then we are looking at a C down, right, as one of the path. As long as this area of 5165 5190 gets broken, then we have a bearish path, right? But that did not happen. CPI did not come in hot, and we went into the bullish count, and that's what we saw, as I shared before, that you had a breakout above the previous high, and all through the day that area was held, and you just rallied into 5300 and even above that, right? So now the count that I shared for a move like this is that we are looking at impulsive wave here, right? And we are right now in a wave three, up, and the wave three should end somewhere in few points high range, and I'll show you, how I'm looking at that count, right? And once this finishes, let's say around 5335 or a little bit higher, then we are looking at some pullback. The pullback can be limited to this breakout of 4260, or I think this would be a right place where the previous balance zone was at 5235, right? And then we have a rally back up again, right? So this will make up a good full impulse wave as 1, 2, 3, 4, 5, right? As in a complete impulse in itself. And I'm not right now going back and looking at a larger time level on how this is fitting, but we are just talking about a very short term, what this wave will really mean. Now, just look from the levels perspective. Where are we right now? So if this was my 1 and a 2, and we are looking at, let's say, where my 161 it was, so that was here, and where is my 200%, that was 5284, and where is my 206.18, that's 5371. Now this is uh SPX, and when I look into similar way on US 500, I get a little different picture. Why? Because there was a big sell-off that does not show up in this chart. That was when Israel had an attack on Iran, and we had like an 80 points dip, and next day we were just flat open, and then it kind of sold off to the 49.50, but the lows in US 500 was 49.20, and the wave count is a little different, right? So but just to say that now, since we are above this 200% counted from this being a one wave top, not this one, because this otherwise becomes a three wave move, and this is a two, then we are looking somewhere here in this area to be to be a top, as let me just go to a US 500 here and show you what I'm saying, that so this drop which I talked about, wasn't there, and neither was this move up, right? Because next day when the market opened, we only got this sell off in SPX, right? So the wave count is different, and from for SPX, the wave one starts here, and then we have this move in SPX. But let's say looking at how this overall image here is, my 161% is really at 5335. So that's one level where I'm cautious that this wave three can finish. And let me just mark it here. So I'm looking at this being one and two, and going in three, and then coming back here at four may come lower, but somewhere around this area, like I said, 5236, 5200. I think this is sufficient enough for wave 4 and 5, right? So this is what I'm currently looking at, but we need to wait for the top here. So I'm not saying that go ahead and just short it. Uh, Once we have a new high, we are still kind of working through this wave three, and I'll be looking at where the breakdown happens in the trend. When I say the trend, this wave three trend, and look for a breakdown to actually short. Or if I go, like I said, here it is 5335. I look at SPX, and here it is. Next level is 5371. I'll see where I get a decent a place to make a short for this wave four. But anyway, like I said, we are in a continued upward movement at in this wave three. Now, given that this move is ongoing, I think the levels that could be bought is if we are continuing any more up, and the sport is not starting yet, I think this area right here provides a good entry point, for any dip. So let's say if there is a move up, or sorry, a move down overnight, and we find it here somewhere in the 5280, and if it comes to 5265, no brainer, right? Then I certainly would like to buy it. But even this area as 5280 provides a good risk reward for the one next level up, either to that 5335 that I showed you on US 500, or even higher, like projected here, right? So, and I look into the count at a very micro level on this one. I think probably if this was a wave four here, a small wave four, or if this was a wave one, I think this we can look at this like this, where we had a very small wave one, two here, and we were looking at this is one, two, three, four, and five, so three and four here. And now we are in an extended five wave, right? And if we are in an extended five wave, let's start counting the extended five wave, right? So if I'm counting the extended five wave, we have one, two, we're still going up in three, so we'll have a small drop down for four and a five wave, right? So basically what I've drawn here. So if we get a dip, we get a dip to somewhere around this 5280 level, I'll probably be looking to buy that dip in the by basically tomorrow and next one or two sessions, right? So one, two, three, four, and five, right? So this is like my micro count as I am progressing up. Remember, when there is so much of a momentum and a breakout, the momentum doesn't die in one day, right? A breakout area is retested. This breakout area will be retested, and move up again, and the momentum dies down, and then this gap will be closed, which was created today, and with that will mark our wave four, and things will move up again. So a back test will keep on happening, and this is the demand which will be tested later on in wave 4, right? In this big wave 4. So this is about SPX, and hope this helps you to understand the levels. Let's quickly look into QQQ. We should be able to apply the same thoughts and mechanism there, that we are here in this wave 1, wave 2, wave 3 is going, so 161% comes at 454. So there might be a small dip which can be bought, and then move up. make this as wave 4, right? I'm sorry, make this as wave 3 top, and we drop for wave 4 back here, right? And then we move for wave 5, right? Now, 161% is a very standard retracement for wave threes. If there is more momentum, it can go up to 200% or even higher. But looking at how overbought things are right now, a certain cool off would be required, even if that means for now, let's say, like I was sharing for SPX, that have a small dip. Like here to 447.70, get bought up, make this top, and then go after the OPEX into this, little larger correction than this one, right? So a very small dip again, which needs to be bought back, but nevertheless, a dip to be, that can be bought, right? So that's QQQ, a very standard wave 5 structure with 161% of wave 3, and then for a move for a wave 5, right? So that also means that if we spend next session or so in this one during the OPEX, we may start the on Friday we may start the dip, right? And then the dip may continue into Monday or Tuesday for wave 4, and then we have a rally next week later for the wave 5, right? So something like that. And when we go back to DIA or go into DIA, very similar stuff, more clear. Now this is not an ABC anymore, clearly heading into 161%, like I said. Very standard retracement. If there is more momentum, yeah, it can go into 404, 405. But I think this is a reasonable spot. And if there would be a correction, correction would come back to this particular area, which is 393, right? And that's where we will be looking to go long again for the wave 5, right? So right now, again, longs have very less risk to reward, to say the least, until you come back here and do it. And I will be looking at completion of this wave 3, which I think we are right now on a shorter time frame. If I just go to 30 minutes, I think we are doing wave 1, 2, probably 1, 2, 3, 4, and a 5, and 3, 4, and a 5, right? So a small chop in there in all the indexes to mark this wave 3 top before it goes into the OPEX and goes for wave 4, right? So that would be my plan for next couple of days for these. Comes to IWM. Again, this did not make a new high, still is below the previous high. When I look into the overall structure, this count made a lot of sense, right? So we had a lot of overlapping moves since January, and it makes sense only for wave 5 because 4 and 1 can have an overlap only in the ending diagonal, right? And that's where I was thinking that, I'm still thinking that this is 1, 2, and we had this 3, 4, and then we had this ending diagonal as a 5. And this drop was just a wave A, right? And you know that wave B can be very time consuming, torturous, and misleading to say, hey, this is a new breakout coming and we are heading to 226 and above. But what happens? You get a false break and you just fall apart from after that, right? So that can still happen. I'm not very bullish on the small cap index, and I want to see this dip, which I certainly want to buy, right? So it's not that I want to short it to hell. My point is that it should complete its complete structure here for the correction, and then move up. So it's possible while other indexes will start the wave 4, this index, which has never been in sync for the last 2 years, will start a drop for wave 1, and then while others go for wave 5, this will just have a minor pullback, and then when those comes in correction, this kind of finishes up its 5 waves to come down to 183, 184, right? So I still think IWM should have downside here, and while others have some portion of correction to come, and then one more high later on in a couple of weeks, or in a in 8-9 sessions, something like that, like I explained, the wave 4 after OPEX, and then rally for wave 5. So it may take around 7-8 sessions in total. right? And the IWM has a different path, right? So this is what I'm thinking for all four indexes right now. Just sharing this out to you all for your review, and please like and subscribe. This content is free on YouTube as I'm building up my channel, and I would appreciate your support for the content that I'm making. Thank you so very much. Have a very good day. Take care. Bye bye.